The Nigerian oil share index closed the previous week at 25,062 points, gaining almost a percentage week on week. As Michael mentioned, First Bank, Diamond Bank released some numbers, and I know Gboyega Olatunde, Btva's research head, is itching to touch on those numbers. Gboyega, you saw those numbers from First Bank, and they were quite poor.
Yeah.
However, the stock price has been on the up and up since it was released. You begin to wonder why.
Well, the thing is, Yemisi, you know, it's a scenario where the anticipation of death is worse than death itself, right? First Bank and Diamond Bank specifically had released profit warnings earlier that they were having issues, particularly with a portion of their loan book that had been attributed to oil and gas, the oil and gas sector. So what we eventually did see was the crystallization of some of those impairment charges. First Bank impairment charges for the last quarter was about 38.1 billion, which is slightly less than a third of the overall size. Impairment charges grew 360% to 119 billion naira. The loan book also shrunk by about 13%. Quarter on quarter, it shrunk just about 2%. But what you tend to see, particularly with First Bank, is exposure to the oil and gas sector.
I was going to get to that.
Yeah, exposure to the oil and gas sector has been the key bane of their loan book.
How about Diamond Bank?
Diamond Bank currently has exposure to the oil and gas sector of about 35%. First Bank is almost about 40%, right? The total non-performing loan book size of First Bank is about 397 billion. Whereas Diamond Bank is just about 56 billion. But the interesting thing about Diamond Bank is, if you check, the size of the impairment charges for the full year was almost the same size as the size of the overall non-performing loan book.
So, like you mentioned, you know, there was a time that, you know, the elephant in the room. There was a time that the oil and gas space was the low-hanging fruit for a lot of these banks. And it seems like the low-hanging fruit isn't very reachable anymore.
Yeah,
What's the outlook? What's the outlook
the thing is, the outlook is still going to be very, very mundane, sated for now. And the reason why I stress that is simply because the overall, in terms of pricing, you are not likely to see the 50s, the 60s, the 70s that we've seen. The World Bank has increased its outlook from, what, $37 a barrel to about 41. Now, that is based on the fact that you did have supply disruptions in, Qatar, and you've had disruptions in Nigeria. Combined total of about 1 million barrels that have been reduced from global supply. You know, but you don't expect that, except the overall economy improves, the overall global economy improves, you don't significantly see anything. And remember that the moment oil prices rise, there's also shale producers have also reduced production. So the moment you start seeing a rise in price about the 50s and 60s, it becomes more profitable for the shale producers, and that comes back into the market.
Still on that, just last week, the World Bank reviewed its forecast for oil price from $37 to $41 a barrel. Yeah. I mean, you might begin to wonder that, does this mean some light at the end of the tunnel in the medium to long term? In the medium
term, yes. In the long term, probably not. A lot of oil supply or energy supply, particularly, is usually based on outlook for the global economy. The greater the outlook, the more positive the outlook, the more positive growth is, then obviously oil consumption should rise as a result. Now, what you've tended to see is the fact that we've had oversupply. We've had oversupply for quite some time. We've had a significant instance where supply levels, global oil stocks, have risen. Now, because shale production has dropped in the US, obviously that has stemmed supply a bit. But by the time that, in terms of pricing, oil price gets to about 50, 60, it becomes more profitable. And you're likely going to see that. Now, oil prices also rose because of the fact that there was a meeting about a week ago where there was going to be a freeze. But they could not reach a compromise simply because what was said was that Iran would pick up any laxity in supply from OPEC. So you have a situation where Iran was producing about 1.4 million barrels, and that was up to about 2 million barrels a day.
So would you say it's a good call? You know, the forecast from
the forecast, yes.
And these banks can begin to bank on that in terms
of
their outlook.
I honestly don't think so. And the reason why I don't think so, it's two factors in Nigeria. One, you have oil supply on one side. Two, you also have the forex supply on the other side. A lot of those loans are dollar denominated. Now, you have forex challenges, capital control issues regarding forex in Nigeria currently. So, except those are sorted. I honestly don't think so. Because what you would have is those loans, if they were naira denominated and repriced, then maybe.
Okay, moving on from the banking sector into the broader space. I know it's a public holiday today, and of course, what's your overall outlook for the 4 trading days we have in this week?
For the 4 trading days we have this week, you know, a lot of it is going to be dependent on market participants' reactions to the MSI. So we basically feel, I'm of the opinion that that is going to be the key driver of what we see throughout the week.
So we've seen 2 weeks of upward momentum. Do you think it will be sustained? So it's a yes or no, so I can hold you to something next week.
No.
It's a no.
It's a no.
Okay.
It's a no.
All right, thank you, Gboyega Olatunde. Gboyega Olatunde is Btva's research head. Coming up, we speak to Temi Kpokpola of Raincap Nigeria and Mohammed of the Nigerian Stock Exchange's Alternative Securities Market. Stay with us. We'll be back in a blink.